Good morning. Welcome to Everything Money. Often imitated, never duplicated. Let's go. Morning, guys. All right, so obviously the markets are down about 2% right now, which is no surprise with all of the news that's coming out about, say, what's going on here? With everything that's coming out about in China with this Evergrande, which we're going to talk about in a few minutes, with the Fed Ethics Committee, which is also problematic, with what else do we have going on? Geez, I mean, yields are messed up. Everything's a disaster right now. So let's see. I mean, futures right now are down about 700 points on the Dow. But let's get into a couple things, and I'm going to go in a specific order. I'm not going to start with Evergrande, but let's start with the Fed ethics stuff, because this was the first thing that came out last week. So there's a couple of Fed presidents that have been, they're not doing anything illegal. It's just they're doing something that's more or less frowned upon. And Alan Greenspan back in the day, he was the one that kind of started this and said, let's just, as Fed presidents, let's stay impartial and not invest in certain individual stocks and not invest in certain ETFs, and that's exactly what's happening. So right now, Robert Kaplan out of Dallas, who's rather public about his opinions, and Eric Rosenberg out of Boston, they said that they would sell their shares that would avoid individual equities for the rest of their terms in favor of funds or cash. So funds, ETF funds, etc. Guys, smash the like button for me, please. That would be great. But so what they're doing is not illegal. But is this? I was talking about it in a group chat. Is this the end of the Fed as we know it? Because there's a lot of issues that are coming down with the Fed lately that we have not seen before. And the Fed has been around for 100 years. This Fed has been around for 300 years. This is the third Fed in U.S. history. So it's not that the Fed has turned over more than one time. So this is a very possible situation that it can happen, especially with the level of spending that we've gotten to, forced or unforced by government. It's still happening. The two Fed presidents had personal investments in sectors in which a central bank was operating. Rosengren also owned a real estate investment. This one is problematic because it's a REIT and it goes along with all of the different interest rates, and their REITs are very sensitive to interest rates, and obviously the Fed is controlling interest rates. That invested in mortgage securities, and the Fed has been buying. Kaplan owned and traded shares worth of $1 million of iShares floating rate bond ETF, FLOT. According to the disclosure, the ETF consists of investment grade securities with floating interest rates. So you can see they're playing with things that have to do with interest rates. Who controls the interest rates? The Fed. A highly defensive position that would tend to be stable if rates rose. Kaplan also owned 2 closed-end funds with floating rate instruments. So they're doing things that they shouldn't be doing. I mean, it's not illegal. It's just frowned upon, and it's being frowned upon right now. Next, let's go to spending. So the U.S. surge in spending, Americans went overboard spending this summer. When we're talking about this, we're going to talk about this Evergrande story in China for a second. Debt is becoming an issue. I'm going to get to the debt ceiling next. Janet Yellen wants to raise the debt ceiling. There's a sign that I pass when I drive down to downtown Cleveland. It says the individual debt per person in the United States, it's in the 80,000 range, and debt just keeps climbing and climbing and climbing. Now, I understand that there's an urge to spend because people were not spending last summer, but $765 more per person per month in the United States this year. Social media is a major role in this player. 39% of all respondents said that they feel pressure to spend more because they see people living it up online, whatever the hell that means. Millennial and Gen Z respondents are spending $1,016 more per month than they did last summer. It's not really a surprise. Pent-up demand is cause for that. Current spending levels. This is the alerting thing. Current spending levels are 4 to 7% higher than pre-pandemic levels. So that means that spending is up over what it used to be. I don't care if there was a pandemic or not. Revolving credit cards are an issue. They have jumped 22% year over year. So debt is not a good thing, guys. Debt is not good. It's good in certain situations, but right now, Janet Yellen wants to raise the debt ceiling because the United States, she doesn't want them to default. So instead of just controlling your spending and not being irresponsible, why don't we just raise the debt ceiling? That sounds like a good idea. Janet Yellen issued a fresh plea for Congress to raise the federal debt ceiling on Sunday, arguing that a default would cause a huge financial crisis. We would emerge from this crisis permanently weaker nation, as you should be. You spent into oblivion. You should come out a weaker nation. It should take a very long time to build back to what you were doing before. You can't think that if you do something this irresponsible, that it's all going to be hunky-dory when you're done. Of course you're going to come out a weaker nation. She previously said that the default could come during October when the Treasury exhausts its cash reserves and extraordinary borrowing capacity under a $28.4 trillion debt limit. We can borrow more cheaply than almost any other country, and defaulting would jeopardize this unviable fiscal position. It would also make America a more expensive place to live. This is what happens when you print $12 trillion and just give it away for free. This is what happens. So the debt ceiling should not be raised. That's all we got to say about that. You guys tell me what you think in the comments. All right, let's get to this Evergrande story. So this Evergrande story is very interesting. Somebody wrote in the Patreon fireside chat on Friday that this place had $300 billion of debt, and I was like, that has to be a typo. Has to be a typo. So this is some real estate company out of China. They're the second largest property developer with $110 billion in sales last year. It has more than 1,300 developments across the nation, many in smaller cities. Investors became worried in September last year after a leaked letter purportedly from the company showed Evergrande had pleaded for government support to approve a now dropped backdoor listing plan. Evergrande said it was fake. Concerns intensified after Evergrande admitted in June that it did not pay some of its commercial paper on time, and the news in China in July, a court froze $20 million bank deposit. Their liabilities right now are $306.3 billion, around 2% of the country's GDP. This is incredible. And guys, if you know a lot about this, in the comments, please write some stuff that you know about this, because I just started looking into this yesterday. I know a lot of you guys have been looking into this, especially those in the Bid and Ask Nation. I know you guys have been talking about it. So feel free to put your comments in there if you have knowledge on this. I mean, this is just incredible. So the issue with this, and why markets are doing what they're doing, I think it's between the ethics thing, the debt ceiling of the Fed, and this. Debt is becoming a true issue. We all knew that. Well, I don't know if we all knew. I have said for a long time, and I know a lot of people, smart people have said for a long time, you cannot just keep borrowing and borrowing and borrowing, whether you're the government, whether you're a personal person, anything. Somebody has to pay the piper in the end. And that is the place that we're getting to. And now we're seeing that a real estate company, whatever, has $306 billion of debt and they can't repay it. This is where it starts. This is exactly where it starts. This is how it started back in 2008. People had to pay their debts. They couldn't pay their debts. And now we have more debt than we've ever seen in the history of the world. Since the second half of 2020, it had $55 million. So they're basically trying to deleverage. That's what they're trying to do. And the country is basically trying to help them out very little. Regulators have approved that Evergrande's proposal to renegotiate debt payments with banks and other creditors. I don't know. We'll see what this happens, but or you can, or like King K said, you can just hold on for dear life and maybe everything will be okay for you. But do not go and buy the dip on this one. All right. Okay, what's next? No, I wrote down transitory. I don't want to talk about inflation. Last thing I want to talk about, then I'm going to get into your stocks. We'll do about 20 minutes or something today. So there's nothing in this story that I really want to talk about. The thing that I want to talk about is go and day trade oil, because this is a I think a bad news story for oil. Last week we had really good news on oil coming out of OPEC. This has to do with climate and they have to spend a ton of money to go green and this and that. This is not good news for oil. Last week was good news for oil. So my point is, go and guys, if you're day traders, please go and follow oil, and you make a killing on this. You can make a killing on oil just because it's so geopolitical. It's so green this, green that, not green this, lobbyists, this and that. You can make a ton on oil based on crazy news that happens on a whatever basis. All right, there is something that I wanted to show. So this has to do with, so my Tesla got delayed again, but we always talk about this charge point and electrify America and this stuff. I was saying that I was going to get the truck from Ford. No chance. So if you go to this YouTube page, and I want to point this out to you guys because not only you look at these companies like ChargePoint, they are terrible financially, but then you go and actually look at what is behind these companies. If you guys go and watch these videos, this is Marquez Brownlee, MKBHD, but I want you guys to go and watch this video behind the 1,000 mile race right here, and this one right here, the first one, that's day 2. Basically what he did is he took a gas powered car, a Tesla, and the Ford Mustang, and he drove around. He did a 1,000 mile trip, and they just basically quote unquote competed. And you can see how terrible the charging is for the Ford because they have to use Electrify America and they have to use charge point stations, and they're all broke or they're just not turned on or something. So before you guys go and invest in these companies and think that they're the greatest thing since sliced bread, please go and find out what is actually behind these companies, because I am so happy that he did that. There is zero chance that I'm getting that Ford truck because you basically can't charge it anyway. So, yeah, that's that. I thought that was very interesting. I watched that yesterday, and he is my favorite YouTuber, besides for myself. And that's that. So, okay. Let's see. Yields are down. Yields are going to be down tomorrow, I'm sure. Guys, pay attention to earnings this week. We have Lennar reporting today. Tomorrow's Adobe, FedEx, Stitch Fix. Let's see, anything. General Mills, KB Homes. I know a couple of you guys are that. Thursday's a big day. Nike, Costco, Rite Aid. Those are Darden restaurants. And then Friday, probably not much. But going into next week, we might have a little bit more. Yeah, so pay attention. You have Micron next week and whatnot. So that's that. If you guys want to join us, this is what I really like to emphasize this. You need to look at everything money as kind of an investment into your future. Not so much that you're just doing a monthly subscription. This is an educational platform. So if you want to be in our Discord community, it's $7. That gets you into our Discord. There's 6,000 people in there now. If you want access to our software, and this is $27 per month. I think it's now 85 cents, 84 cents a day, something like that. Guys, if you need to invest in your future, here it is. And not only do you get this, but you get the Discord access as well. Plus all of the exclusive content that we're going to be giving to subscribers. If you want to join the Bid and Ask Nation and start trading, $77 a month gets you that. And that gets you Discord access, exclusive channels, employed trader series, etc. If you want to do a one-time session with me, $750 for 1 hour. We'll run through whatever you guys want. We can go through trading and whatnot. And lastly, if you want to do a real estate deal with Paul, especially if you're doing something in this chaotic market, do it with somebody who has been through the ups and downs of the real estate market. $10,000 for 4 hours, and that gets you that. So I am going to use TradingView today, and I'm going to put out, and I'm going to shrink my head, and I'm going to put out a video later today and explain to you guys what settings we changed in TradingView. And I'm going to say it wasn't me. This was all Cash. Cash 100% figured this out. I did not figure this out at all. He is very good at what he does. So when I put out the video, please thank Cash. Don't thank me. I didn't do anything. Next, let's go. Let's go. What do we got here? SWBI? Sure. I'm looking at SWBI as a value play, to be honest with you. But let's look at it from a swing trading perspective, because I'm looking at it over here long term. That's a pretty terrible stochastic. But over here, I'm kind of liking it. Kind of liking the move. We're hanging right above that 200-day moving average. This is looking really good. The only thing that I would want to pay attention to on here is just make sure you're getting some increasing volume. That's where you're gonna need to get some kind of big increase. All right, next, let's see, Nvidia. Why not? NVDA. Guys, smash the like button for me. That would be wonderful. We got 15 minutes of stocks to do today. That's wonderful. Okay, so Nvidia, rolling over a touch, just a touch up here. But it's not surprising. I mean, all you're doing is just consolidating in this area. Eventually it was gonna roll over, but still, you're not even close to the 80% level. So just stay patient with it. You can take your profits off the table if you want to. You are trending down over a daily, but you're coming right into this 25-day moving average. So that's really no issue. I think you'll be okay here. But if you want to and you're long on this thing, go ahead and take some profits. Next. What do we got next? All right, let's look at SPY. So I've had multiple people ask for SPY. And then after this, I'm going to do a bank. Okay, so SPY, you can see the trend is coming down. Now, don't be fooled by this. You're coming right into the 50-day moving average. You're going to get held up. I'm sure this thing is going to drop down here today. Guys, I say it all the time. The plunger... Oh, wait. We're right here pre-market. So the plunger protection team is going to come in. And for those of you that are asking, what is the plunger protection team? It's the team that comes in and plunges the toilet, which is the stock market, and makes everything okay. Because... they're not going to let this market crash easy. It's just not going to happen. So the big institutions tonight, right now probably, they're going to come in and buy futures, and they're going to buy the hell out of futures. I wrote in the chat earlier, I am sure that I would not be surprised to see this market up pre-market tomorrow 1%. Would not be surprised, because that's what the PPT does. So anyways, you're just consolidating in this area. Don't bet on this thing to drop. I don't know when. Let's see when the last time we had a. When's the last time we were? Last time we were below was November of 2020. That's the last time we were below 80% on our stochastic. That's wild. All right, PPT. They plunge the poop. Okay, let's do XLF. I want to look at XLF, which is the big bank ETF. So banks lead markets, and right now you can see that the banks are down, 2% at this point? And it's no surprise because banks lead markets. You can see that the trend is starting to come down. That started last week. We're gonna open the day down here, and you can see that there was strong consolidation back in here. It's no surprise that they're gapping down. It's gonna gap below its 100-day moving average, which is not ideal. But if things do start falling apart, and the reason, if you look at this chart, now let's look at Bank of America. Remember this chart, BAC. It almost looks exactly the same with the exception of a little bit of blip because it's not an ETF, obviously. But this is opening below it's going to open below the 100-day moving average also. You're starting to get a rollover on the stochastic. The reason that we have Bank of America in the employed trader series, it's very boring, but I'm telling you guys, when this market falls apart, the banks are going to lead the market down, and Bank of America is going to be a huge capitalization point for us. I promise you that. Next, JP Morgan. Why don't we just stick with banks here? Wow, guys, look at this. Okay, here. Remember this chart right here? And now watch this. BAC. Literally exactly the same chart. And if I type in XLF, it's going to look exactly the same. Because all banks do the exact same thing, but they roll with the market. That's it. Pick any bank you want. You want to trade Goldman Sachs, Bank of America, Citigroup, Wells Fargo? I don't care. They're all going to look exactly the same. I chose Bank of America because it was $25 stock or $40 stock, whatever it is. Okay. And not like Goldman Sachs that's 200 or 300 or JP Morgan that's 150. So, all right. Let's do this one's rolling up, but you see we're opening down about $5. This trend is going to turn on you. It's exact same thing as you're opening below its 100-day moving average. Everything's going to be the exact same on any bank that I do today, so I'm just going to stop doing banks. Nike. Let's do Nike. Nike. Okay, so Nike, the good news about Nike, it's a great looking short right now. It's on its way down to its 100-day, and it has a big gap to fill. This gap is for sure going to fill, I promise you that. It's opening the day down at $153.71. Excuse me. And this is going to be a good one. So if you want to short this thing, let the yellow line get into the sweet spot. Make sure you're following the rules. Execute the trade. It's going to be very good. You're going to get down to this $135 level. I promise you. It's only a matter of time. And that matter of time will be even faster if this whole market falls apart. Look, which looks pretty more possible today than it did on Thursday. All right, so right now with Walgreens, you're just hovering around these moving averages. Good looking swing trade. If you want, I mean, I'm sure this is opening down today. Yeah. Oh boy. I need some gum or something. I need some saliva in my mouth. All right. Moving. If you get a positive day tomorrow, you can probably swing trade this into this 25-day moving average. Now, I'm concerned about this teeny bit of rolling over that's happening right here. You can see right where I circled on this red line. It's just tiny bit of rolling over, which I'm not a huge fan of. But let it it's consolidating. It's all it's doing. Just if you just draw these lines, you can just see all of this mess that's in here. Eventually, I think it's going to get going to the top side, especially with more of this. If this Delta thing is true or whatever, and people start moving into Walgreens for shots, and I mean, Walgreens is already starting to move into like minute clinics, so they're a good-looking stock. They're a good-looking company. Mo, I'll give you a foot massage for SMG. I will do SMG if you do not touch my feet. Scott's Miracle Grow. All right, let's see what we got here. Let's zoom out. All right, so the good thing is, let's just draw a line straight across. And you can kind of see that in this area, you kind of had let's look back at the whole chart. So I'm going to clear this. If you look back at the whole chart, there's nothing really on here where you had a several month period like in here of consolidation. You really had an incline everywhere you went in this chart. So right now I just look at it as, okay, this is strong support, but it's also strong resistance. So you're going to bounce around in here a lot between 150 and 180. From a long-term perspective, you gotta wait because look where you are down here. You just got to be very patient. Now, from this perspective over here, same thing. You got just be patient with this thing in total. I don't know if you're asking about this from a value play, but yes. Okay. Let's see here. Where do we got? What about China stocks? China stocks. I mean, China stocks are going to be what they are. Let's do some. Let's do Baidu. Looks like every other China stock. Comes straight down after a massive peak. Good thing is, wow, this is actually pretty surprising. Look at this. I would expect, with everything that's happening with Evergrande, I would expect this thing to open down here just because we've had worse days on Baidu based on them being forced to give the Chinese Communist Party money than we're having with really actual bad news out of China. Anyways, if this trend continues, grab it when it gets into the sweet spot. Let's do Momo. Let's do Momo. Same thing. I'm actually quite shocked here. Let's do Baba. And then, what's that other one? 10 cents or something? Yeah, Baba is actually... Okay, Baba's getting hit. Baba always gets hit. All right, it is what it is. And what's the last one? 10 cent? T-E-N-C... 10 cent. Oh, yeah. T-C-E-H-Y. Oh, actually not bad. So, these Chinese ones really aren't that bad. Let's look at Apple. Let's look at a good U.S. company. What is going on with the Evergrande thing? Just waking up to the blood. James, go ahead and watch the beginning of the show again. I talked about it a little bit. But if you want to talk about it more, I'm sure we're going to talk about it in the Bid and Ask Nation today. So Apple is just consolidating. That's all it's doing. Tech's going to get hit with everything else. This reaction today of dropping down here, I'm taking it with a grain of salt. I think the plunger protection team is going to come to the rescue, and everything's going to be fine. So next, LAC. Oh, the Lithium. Let's see what the Lithium is doing. So I hope you took profits on this. That's what I hope you did. Because you are really overbought. That's really steep. Your volume is declining on you. And this thing just shot straight up. That just shot straight up. Can I change this thing to lines? Yeah, if you look over if you look from September 13th to, this thing just shot straight up. So I really hope you took profits on that if you were in it. Just because I remember I told you to take profits on it. Bitcoin is down to 43,000. RIP Bitcoin. Don't worry, guys. It's going to get up to, I think it's going to get up to 990 billion per coin by the end of this year. So, a couple more months. I think it's pretty bearish. JKS. What is JKS? I remember looking at this quite some time ago. So whoever said this, who said this? JKS, Stefanos, my Greek compadre. So I like, I love the sweet spot reversal it did. I really like the trend that's starting to come up down here. This is looking great. Earnings happened a couple days ago, so that's wonderful. Yeah, this is looking really good. It's opening down here pre-market. Don't worry about that. But this is looking really good. Keep an eye on this one. Make sure you're getting good, consistent volume, and I think you'll do very well here. T-Mus. This company is just... So my father, in all of his infinite wisdom, decided to switch to T-Mobile over the weekend, and he said, it doesn't work. He said, Mustafa, it doesn't work. I said, Dad, what's the definition of insanity? This is his third time switching to T-Mobile. The definition of insanity is doing the same thing over and over and expecting a different result. That's exactly what he did. I just don't get it. But, oh well. All right, what else are you going to do when you're retired? You just go and switch cell phone services for fun. So right now, you're just holding a tight consolidation level. That is an epic fall from T-Mobile. I think I would keep an eye on this thing as a swing trade. You'll be able to grab this thing, run it up to the 200. Actually, if somebody in the Bid and Ask Nation can please just tag me and say add T-Mobile to your swing trading watch list, that would be great, because that's going to be a very nice swing trade. Facebook, haven't done that one in a while. Okay, so Facebook, Facebook is one of the fangs. Obviously, it's led the market up to incredible highs, and it's going to lead the market down to incredible lows. So if you want to go short on this thing, you can. Just be careful with it. Short it down to the 100. And if you're long on this right now, just take profits on it. Take profits on it. He switched to the new iPhone. No, my dad doesn't do iPhone. My dad only does Android. All right, so let's see here. So great run up on Costco, and I want to pull up Costco because I want to show that everything that's led the market to its crazy highs will lead to look at the pre-market pullback on Costco. So stocks are not forever, guys. They're contrary to hype dork belief, stocks are not forever. So this thing is going to get yanked back on you. Take profits on it. But if you want to, just wait till tomorrow and see what happens. Okay, let's do CCL. CCL, I'm sure, has gotten, they're just consolidating a little bit. Great looking trend coming up. I would like to see a lot more separation, though, and a lot more power. From a daily perspective, this looks great. Yeah, this looks really good. Swing trade this into the 200-day moving average. You're going to get a little pullback today, but that's the overall market. So, okay, my brother lives 5 miles from T-Mobile headquarters, and he doesn't get service. Fatal Nexus, Android over iPhone. I don't think it's appropriate on YouTube for me to say my opinion on that comment. I'm just kidding. I like you, Fatal Nexus. Okay, Altisource, I don't know what this is, but they have a gap that they need to fill down here, and that will likely fill, especially because you're in this very overbought area. Now your trend is swinging up for you. So what may happen is swing up, come right back down, and that's when the next time this happens is when you fill that gap. That's probably the case that's going to be made. Roku, speaking of disruptive, Roku. I have never in my life. So I went out and bought a Roku the other day. I think I paid like $15,000 for it because this is such a disruptive piece of technology. I was like, just take my money. This is disruptive as can be. So right now, Roku is just, I love it from a daily perspective. It's just creeping up. Let it get into the sweet spot on the daily. But down here, it's just chilling out. It's just going to settle down here. Eventually, I think this thing will get turned up. But remember, Roku is incredibly, incredibly overvalued. This one has been one that has led the market up big time. It's going to lead the market down big time. Trust me. Pinterest. It's been waiting to fill the gap forever. That's right, Janie. What do we got here? So Pinterest, I'm sure, is going to get hit a little bit today. No big deal. But Janie, this thing is it's a dog stock. That's all it is. Just consolidating along the bottom, going. Eventually, this thing is going to fill up. I promise you this thing is going to fill up. I don't know when, but it's going to happen. Next. What do we have next? And what time is it? 15 seconds until the market opens and all of the hype dorks start crying. Tesla. Alrighty. Tesla is at a resistance point. It's just hovering right there. If it breaks out to an all-new high, I guess you can get on it, but I don't know, guys. All right, the stock market's open. Yeah, all right, I'll do 2 more, and then I'm going to get out of here. ZM. Zoom is also super disruptive. Zoom is super disruptive. I never heard of a video call until COVID happened. I mean, this is just, I don't even know how this thing is down this much. I mean, this is as disruptive as they come. So Zoom gapped down completely. I mean, this is bad. The trend continues to go down. If you get some kind of engulfing candlestick down, I think you can go ahead and short this thing. I think it would be perfectly fine. All right, last one. Let's do Snap. Snap-a-roo. This is another one that could really... Wait, is this Snap Inc? Okay. This is... Hold on a second. Just want to make sure it's not... Yeah, Snap Inc. All right, cool. So this is another one that's incredibly overpriced. They have a big gap that they need to fill. So not as big because it's kind of already filled this top part of it. But let's see here. Breaking down a little bit. You know what? As far as this one goes, I wouldn't even touch it. I would move on, find something else, and go on from there. All right, guys. That's it for today. You guys have a wonderful day. Just be patient. When all of these, when it hits the fan like it does on days like today, let's see what the market's doing. Just relax. It's going to be okay. I mean, you don't need to get all worked up about certain things, and markets are going to do what they're going to do. Look at that. The Dow was down 700 points to open the day pre-market, and now it's only down 551. So it's already coming back. The Russell's positive, for God's sakes. I mean, really, if you look at this, it's the big tech stocks that are leading this down: Apple, Facebook, Netflix. But when you just don't worry. Just don't worry. Listen to Uncle Mo. It's going to be okay. I promise you it's going to be okay. And if you need daily coddling from me, join the Bid and Ask Nation, and I will coddle you to your little heart's desire. Bye.